Anheuser Busch, let's start with this one because we can dive into the companies without really needing to do much of an introduction. Of course, these are branded consumer goods. AB InBev, of course, is the world's largest brewing company. Very interesting for us here because it's listed on our market. Fantastic. It is here because it's in the process of taking over SAB Miller, but its own business, of course, comprises the Latin American operations, the InBev stuff with brands like Beck's and so on in Europe, and then they bought Anheuser Busch, which is Budweiser. So big company, very well run, really dominated by the Brazilian interests that control it. Market capitalization is about $194.75 billion. Not about, exactly that. Price to earnings ratio 25.89, dividend yield of 2.80. Chris currently raising a boatload of money in order to buy SAB Miller, but not seeming to have any problems.
Well, I was about to say, very successfully, in the international bond markets, and they've been doing this for quite some time. So I think what international investors are seeing in Anheuser Busch is a nice, stable company that might not be shooting the lights out over the next few years as it digests the SAB Miller acquisition, but it's going to be keeping on pumping out some really nice cash dividends over a long period of time, and they're more than happy to give them the money in terms of their bond issuances.
Yeah, because we know that sovereign bonds are paying piffling sort of yields. So, corporate creditor like this that's got real scale and real cash flows is great. Let's have a look at the share chart, because what this will show is the New York Stock Exchange listed Bud, which is how they kind of pulled off the thing. So they took the Brazilian thing, then they bought InBev, and then they bought Anheuser Busch, and they used that, and it's an ADR, and it's listed in Europe as well as here, but I guess it doesn't really matter. You can see the wobbliness at the end there is partly the market and maybe partly people's ambivalence about whether they're paying too much or not, because this is going to be a company with a lot of debt.
Yeah.
But that's the way it works in global markets. You don't go and issue shares in order to do these acquisitions, right?
No, I remember many years ago asking the then finance director of SAB Europe, what kind of constraints they would have in terms of issuing debt to buy companies. And he sat back and he said, I can't think of an occasion where we would have any problems at all because of the huge cash generation of these companies. And Anheuser Busch is an even bigger operation.
Yeah.
So the cash that's produced by this company is really, really prodigious. And their ability to service debt, obviously not unlimited, but I mean, they can service debt, huge amounts of debt.
Talk to me about the compromises, though, that they've had to make in order to acquire SAB Miller. And I know it's sort of overlapping the conversation with SAB Miller, but I don't mind that they got shot of Miller because they've got Budweiser and all the associated brands in the US. I didn't even really mind so much that they got shot of Grolsch because, again, in Europe they've got Beck's and they've also got Stella Artois and so on, which is basically the same thing, right?
Yep.
What worried me was the decision to not buy or find some way of buying Snow in China. Because that's the number one brand in China, whereas AB InBev's brand Harbin is number 4.
Yeah.
Was that inevitable? Was it because they had the partner that had a put option and all that sort of stuff?
I think it's your latter point. I think the partner, China's Resources Enterprises, really wanted it. I mean, CRE is a very big company in China, and it's got lots of operations in terms of department stores and all sorts of things in China anyway. But I think they really wanted this one. And it came in very much under the radar a couple of weeks ago. They got rid of that. So it means from a regulatory approach, Paul, as you say, they've got the US is fine, Western Europe is now fine, China is fine. There's very little left. We'll be having the South African situation fairly shortly, but there should be no problems with that as well.
Now, what about the listing here? So what you have here, just to be clear, is you've got the foreign company. This is an inward listing, but it's the same. You can buy the shares here. You become part of the whole global enterprise. You'll get your dividends paid in rands. It's all very straightforward. Carlos Brito, the CEO, came here, pressed a bit of flesh, blew the hooter downstairs, did the whole thing. Now they're on the market and they're set and ready. How do you think that's going to trade? It's principally obviously going to trade in its global market listings, and then it's going to be a function of the currency. So it's a proper rand hedge type
absolutely
thing.
And the price obviously is going to be set offshore because we're going to have a small proportion of it here.
Yeah.
And over the next few years, we have the companies like the organizations like the PIC, which is elected to take shares in the new enlarged company.
Yes. How's that going to happen, though, do you think?
Well, basically,
because you're going to get paid out at some point in the next few months for SABs, and then it's going to be up to you. You're going to get a capital gain and everything. It's going to be up to you to decide what you want to do to buy the AB InBevs.
Well, no, not the not organisations like the PIC. They've elected to go for the slightly lower offer, about £38.50 a share. And their share is going to be locked up for 5 years.
They indicated they are going for that
from
other thing.
From what I'm aware, absolutely.
Yeah. Okay.
So that was one of the reasons that Carlos Brita and his management team were so keen to get the PIC on board, to show this, to make sure they actually got the 51%.
But personally, I wouldn't want that convertible bond thing. It's too complicated. Why don't you just buy the ordinary shares? So take the money and then go buy the ordinary shares in the market.
Well, you could do that, I suppose, but this way you get locked in and be all sorts
and you doesn't trigger the capital gain.
There's no capital gains. That's the main thing.
All that sort of rubbish that doesn't really interest.
So yeah, I mean, I think PIC will probably end up with about 2 or 3% of the enlarged company or thereabouts.
It's not exactly a king-size portion.
It's not a king-size portion.
But this is a $198 billion company with
and this is going to be the biggest company on the JSE by far, twice the size of its nearest competitor.
But interestingly, it doesn't qualify for inclusion in our indices until you've got a 5% holding so it's like a national project. If you want the thing to be in the index, you better start buying it, right?
Yeah, absolutely. And I think that'll happen. Once people realise just how serious a player this is.
Yeah, it's a good one. Good. So hot or not on this company?
Oh, this is a hot company.
Hot, yes. And look, the share price has been a bit wobbly with the rand going harder, longer, stronger, but it's kind of around 2,000 rands a share. That's what we're looking at there. That's the dollar price. But if you look at the rand price here in South Africa, you'll see that it's been a little bit wobbly. I think it's been down at around 1819 recently. So it's not really making much progress now, but it will in future. Good. We're hot on that one.